What the business is, YouTube? This Clarence over here at Pursuit of Freedom. Man, I feel like I want to boast a little bit, but I ain't gonna do that. Not too much, at least. Not too much. I've been looking at this market, man. Looking at this market. I try to get day in, day out stocks, charts by the tons, high volumes, high numbers. You heard me? Now, I think my last YouTube video, suckers bounce. Suckers bounce. Talked a little bit about solar companies. This was 5 days ago. This is over a week ago market getting cheaper. And I got to point stuff out, man. Because sometimes the people be trying to give warnings. Do not be deceived. Market at all-time highs can be deceiving. My videos get too long so they get no views. But do not be deceived, man. The bear is coming. Lazy bull. I mean, I've been trying to talk on this ish for a long time. For a long time. Look at this here. Back 5 months ago, I think I really began to notice, you know what I'm saying? Absolutely slow open. Absolutely slow open. Market moving at a snail's pace. You see the snails up there. I'm going to keep scrolling back, though. Why do you think I got a bear? You know what I'm saying? Why do you think I'm starting to put bear on charts 7 months ago? Huh? Look, here's another. Don't be afraid of bear markets. 8 months ago. That's almost like the beginning of 2019. Don't be afraid of bear markets. The bear is coming. The bear is coming. All right, but I want to talk to you about boom and bust cycles for a second. Look at the market, man. I'm going to come back over here to Trade King. The market since 2018 has not truthfully gone any higher. But look at the absolute banging boom cycle from the bottom at the beginning of 2016 to this here top of 2018. 66% growth, and that's in the Dow. The NASDAQ, the S&P, they all look the same. The growth is damn near the same. You know what I'm saying? To up to 2018. 70% in the NASDAQ. The market had climbed from 16 to 18. Now from 18 all the way to 20, at least in the S&P, we have not really done much. From 18, from the tip, the high of 18 to the high of 19 so far. That's 4% growth in almost 2 years. That is disgustingly, ridiculously terrible. Terrible. I've noticed this months on top of months ago, man. Months on top of months ago. This panic right here was screaming. But that kind of can get into what I want to talk about for a quick second today. How long I've been yapping? I can get this thing. I get started. My mouth get to running on the subject that's worth talking about. You know what I'm talking about? I don't make dollars. It don't make sense. 24% growth off that bounce. So these boom and bust cycles, man, this is where the separation of wealth takes place. But it has to take place in the form of assets. See, so if people out here that acquire these liabilities, like I'm finna get rid of my liability. It's gonna take me a few months to pull it off. I'm finna get rid of my liability. My brand new car, hey, it look nice, but if you can't go to the lot and be like that one right there, slap the dealer in the face with $25,000, $30,000 cash, then you need to stay away from it. At least that's my philosophy. If you can't pay for it cash or buy it twice, you can't afford it. Anything you got to put on payments, that means you can't afford it. All right, so these cycles, man, this is what separates the rich and the poor. Because if you was buying the market from this bottom down here, I mean, you could. That's absolute astronomical growth on your money. Because some companies jump 1,000%. This is the overall market climbing to this degree. You know what I'm saying? I mean, just off the bounce that began our year in 2019, if you capture that from bottom to top, That's 27% of your money. Now that's 6.9 months. But that is a large percentage on your money. That is absolute growth on your dollars. See, when people selling, let's get to this here chart. Now, I've been trying to find a chart to just give you a little illustration of what I wanted to say or what I mean. So when you get these expansions right here, when the market is climbing, you get the euphoria at the top. But people think that, it can only go higher. But once you get the sideways moving, if the stock is climbed for a while, then it starts moving sideways, I'm out my position. I ain't waiting. I ain't getting too greedy. I'm learning from this market, and I'm learning from my mistakes. You know what I'm saying? Then you get this recession. If we get this here curving down at all, period, and you still in it, because I'm long gone. You hit the sell button. Even though this is a Wikipedia, but this illustration explains perfectly what I'm talking about. So if you hit a recession, which we get one every 10, 12, 15 years, and I'm been 10 years to the dot since the market started to climb from the last recession. It done been 12 years for me because 2007 was the recession started for me, right? But down here in this depression area, when everybody has sold everything that they own, people, because I remember through the recession, I sold all, and I had lots of jewelry, and I never really got my hands back on gold. And gold is telling the story right now because gold is at all-time highs. Now, gold is always supposed to be inverse with what the market is doing. I don't get how the market is at all-time highs. Pretty much. I mean, we still at a high up there. Like, what's GLD? Look at GLD. Look at gold, man. And this ain't the biggin. This ain't the biggin. Let's look at the big dog. Huh? Oh, that ain't the big dog neither. That's bear. I got to find the big one. I got so many. You know what? I got a whole chart for them, but I don't want this video to be too long. I got all of my metal plays on one watch list. Let me just come back to the overall market. Huh? What I got going on? Oh, okay. Okay, I see what's going on. Her. Okay. Now, I love to use the Wilshire too, because the Wilshire tell me what 5,000 companies are doing. But anyway, so during this here cycle, when people are starting to sell everything they have, right? People selling houses, people selling cars, they reneging, going into foreclosures, selling up their jewelry, giving any asset, anything that has value is being sold by people. And I'm not just talking about stocks. Everything that has value, when people are in a recession, is going to get sold off hard. And the wealthy buy that up through the depressed state at this rounding bottom. You know what I'm saying? I like bottoms. You know what I'm saying? I like bottoms. And that right there is the best time to be buying. Warren Buffett said to the best, when everybody's selling, I'm buying. So when you get down here, I actually want to buy when it starts to curve up. You're still close to the bottom. I don't care about catching the exact bottom. But the last recession, I'm going to go ahead and change this to a monthly chart to get to the last recession pretty quickly. Okay. That's the Wilshire. Okay. So the last recession was, like I said, it started in 2007 for me. 2007, 8, 9. The bounce started in 2009. So, you know what I'm saying? Well, what I'm getting at is that the great expansion of wealth, I don't want to, okay, I can do it inside the bubble. 270% growth in the S&P 500 from that bottom. That right there is an exchange of wealth. Everybody's selling everything that they own during this fall of 2007, 8, and 9. And the wealthy people buying it up in 2009. The wealthy are buying it up. But we at a top right now, so I don't think the buying is going to thoroughly begin. We need to start falling off all the way down to like this here 2000 range. You know what I'm saying? S&P back down to 2000 for me to see. Because look at this here. history repeats. So I think we're gonna fall. We might even fall, come back up to the same high, fall again before we get a real expansion again. But right now, the cycle is about to shrink. When I say right now, that's kind of a loose term. It could mean a whole year. You know what I'm talking about? I don't know when this stuff is going to really, really start to fall because we still, on the monthly chart, this thing is still at the top. But even on the monthly, it's starting to play with the short-term moving averages. On the weekly, we beneath the short-term moving averages, trying to bounce off of 50 longer term in the moving averages. But on the daily chart, we beneath the 50. The price action is going beneath the 100, and we are approaching the 200-day moving average. That is a sign that the bears are taking over the market. You know what I'm saying? Just looking at, you got to look at every indicator possible. Another thing I want to pop out for the last few days at least, volume is kind of, been like it want to taper off a little bit. You get the big suckers bounce, which I got the video on that. And, I mean, I ain't explaining anything thorough, but I'm trying to say I believe that was a suckers bounce. And sure enough, if they bought, people, especially if they're buying up here, they discussed it right now that the stock market is back down. Volatility, I'm expecting it to pick up because there are a lot of algorithms involved with this here. It's not just a pure market where you're trading. You got whole firms that use algorithms to move the money back and forth. So I do expect the market to give you another bounce. If the Fed cut rates, even though they just cut rates before this recent sell-off, I don't get how that's supposed to happen. They cut rates and then the market sells off, right? So I'm expecting them to get another bounce and then some more selling off. I don't know what's going to happen though, but just keep your eyes open because when this thing finally hits a bottom, you better be cash ready. I'm already positioning myself that I can be as cash ready as possible because that's when the get rich is going to happen. This is Pursuit of Freedom. And I'm, just to keep your eyes on that down. And I mean, when it be cash ready down here in this depressed state, because that's when get rich is going to happen.